Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. We have changed on the larger time frame as the market re-entered the May's range, making a significant advance. However, both the monthly and the weekly continue to present a one-time framing lower situation. On the daily, we had confirmation of the excess left on Monday with acceptance and value above the range, and we managed to close the two immediate gaps left on the way down and settle above the 2800. That's a very significant move. Before the late spike, we had a well-defined 5-day balancing range, but the breakout above 2800 opens the question mark on whether we have properly re-entered the May's intermediate term balancing range, or if we're gonna fail on this late move and come back to this lower range. That's the question we need to ask quite soon. So zooming into the market profile, we see how after some initial hesitation in the morning here on the A period, the market managed to take off and rally for most of the day. We even had an initial gap up which was close to the tick, and then we rally. Now, the extent of the move is not surprising considering how short the market was, as mentioned in the last two briefings. However, it is clear that the market was driven by short-term money. Judging by the weak structure left out, there is a considerable amount of poor and weak lows. I will quickly highlight them here. So, well, the low has only 3 ticks excess. That's very questionable, and the A low, it's exactly 1 tick above Monday's high. Then the FG lows matching, and later in the session, the JKL and even the I low are very near from each other, and that's the base for the late spike. So I would say that late move was originated. I mean, it started here, but then there was some hesitation, and towards the end, we had kind of a rally from around this area. So our immediate focus for the morning is on assessing acceptance or rejection of this late move. If we get acceptance within the spike or above, that's positive. That confirms the move and increases the odds for continuation upwards. While if we get acceptance below this area that I just marked here, that will be rejection of the spike, and that will denote change versus the close, and that will increase the odds that we have further balancing in this newly defined balancing range. Again, as we always say, odds are just odds, so anything can happen. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.